currency, even weaker. EM growth, even bleaker. Where it goes, they don't know, but need a leader. LTR, not talking leaders. Long-term rates is what I mean. Or invert the curve and set the leader.
All right, ladies and gentlemen, got your watch list coming into August 14th, 2019. And surprisingly, we're almost halfway done with the month. And August is usually where it starts to get bad. So today we had something very, very interesting. A few things. One warning was triggered, and that is what I'm going to refer to here, the title of the video. And that has to do with the 2-year and the 10-year spread inverting. And then we also got news of delayed tariffs in a sense. It was a little bit weird, and even how the news came out today, it was crazy the type of move we saw. And I don't know if you guys could see this here. Even we'll talk about the two sets, but you know, in a few minutes, roughly 8 minutes into the market, it shot up 2 points on the S&P, and then two minutes later, it shot up another 3 or 4 points, which was a huge move. So we're going to talk about that. I got your keys for tomorrow. I got your plays that we are going to watch, and some have to do with earnings. And we're just going to talk the overall strategy and approach, especially with some of the other videos I posted and how we are going to be responding to this volatility here. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and then make sure you're there in the morning. We are live Monday through Friday, 30 minutes before open. And the most important thing you need to do, post your watch list below. Tell us what you're playing, maybe what you've already played, but we're really more concerned with what you're going to play. Source that information, get some play ideas, and then again, be there in the morning. So let's talk about it. So the two things right off the bat here that happened this morning was, one, within 8 minutes that caused this first run up, there was reports that Mnuchin was going to go and meet with China over another set of the trade deal, that there was, talks were on again, and the market took that as good. And now that was a big boost, but then literally it started to come down, and then as it was coming down, the next piece of news that they said they're going to delay tariffs, or some of the additional tariffs, till December, and other reports came out following that. And this is a monster move that was created by that. And obviously you guys could probably understand why, considering the reaction we saw. And that is really the first piece of the keys for tomorrow that we need to be looking at. So as you guys could see here, the keys for tomorrow, watch the levels above the first gap down, which I'm going to show you. There's two different moves that occurred. One was the Fed, one was tariffs. So if the tariffs, quote unquote, go away, and again, this is where I think it's going to get interesting coming into the next few days here. The next thing the market is going to want to digest is the Fed. But now this was the Fed, but this was the tariffs. After the tariffs and everything, we saw the market gap down, and now we are back above that, but we're pretty much again pinned right at the close with the VWAP. So I don't think this is coincidence, and I also don't think it's technicals. I think this is where the market is waiting, and they clearly sent this a signal, or even whether it's algorithms, whatever you want to call it, people have a price level in mind and how they are pricing in the future events, everything following post earnings, so on and so forth. So if it does start to pop up above 293, 294, watch for it to come back to that level here around 295. This is the bottom end of when we had the reaction to the Federal Reserve. So if it does break above there, I think that is going to be our level to watch. But if it does start to come down from here, this is where all of the other factors could come into play, and that's where today's big warning comes from. Again, watch the 295 level, but the next thing that occurred today was the 2-year, 10-year spread. That could invert this week, and today it really collapsed. So here you can see it on the 5-day, but this is just today right here alone. It was about 6 basis points, or 0.0654, and at one point it collapsed to about 0.0145, which is about 1 basis point away, or a tenth of a basis point. You guys could do that, but again, even the move, even right now after hours, it's signaling something a little bit higher. It moved up, but when we go see the bond rates, they're still pretty low. And now this is the issue here. The 2-year, 10-year inversion, a lot of people were asking, what is this? I strongly encourage you to watch the videos I've posted last week, yesterday, the days before that. This stuff is very important. And even if you don't get it, or if you want to get it and you're not going to look into kind of how this works, you're really just leaving yourself at a disadvantage, in my opinion. It's either that or just quit asking about it if you don't want to take the time to understand it. It is a little boring. It does have to do with the bonds, but it does have an important signal, and that's what I'm going to even talk about here with the two theories that could happen. But essentially, the 2 10-year inversion is when short-term rates go higher than long-term rates. And in this case, the 2-year becomes bigger than the 10-year or higher than the 10-year. And when that happens, that starts to really set the official yield curve inversion. And we have seen some of that in the earlier months coming into March and then even December when it started to approach inversion or even flattening. But those were just at, one point on the 3-month and 10-year. That doesn't really invert the curve. But now you'll have the 3-month above there and then the 2-year above the 10-year. That would lead to an officially inverted yield curve. So the basics of what we need to understand here, there's a few things. One, if it inverts, the market can still go up, and it usually has in the short or the middle to longer term. Even after a flattening or inversion, the market could go up. The key trigger for this to be something negative and to cause volatility is if the Fed cuts after a flattening or an inversion of the yield curve. So again, we have the meeting in September. If the market did start, if the trade war was freaking out the markets and the market started to test these bigger lows, that could have led to possibly an emergency cut. But again, some of those rates and those odds are actually dropping now after these, this last 4 or 5 days of holding up this range. If you really think about it, the climate is a lot different today than it was, last week or even last Tuesday. We gapped up a little bit. We had this run up, but then the next day we gapped down. So even if we gap down tomorrow, we'll be right back at these levels. But it's a different climate than coming in down, responding to the Fed. The markets were in turmoil. You could kind of tell how people were reacting. It's changed from there. However, if that speed does pick up again, the next thing to watch is the action from the Fed coupled with the inversion of the yield curve on the 2 and the 10. So there's that part, but again, market could still go up after it does invert. It doesn't mean instantly that the market's, oh my God, it's gonna crash, oh my God, I need my bounty. But if it does invert, I suspect, this is my opinion on it, because we saw something similar, that the markets and the algorithms might react negatively like they did on the first inversion. So in March, April, you saw markets kind of get a little volatile on the first yield curve inversion, which was around here on the 6th and whatnot, and the curve inverted. But then if you come back to October, I think it was October or December when the curve first flattened, then not even just inverting, but flattening, the market responded more negatively. So at both instances, it's just a matter of how does the market take it at this point. But if that does occur, you might start to see a risk-off event, but we don't know how that's going to play out. But that is what I'm suspecting here. So if we do see that invert, and I think we could see that either this week or next week, it wouldn't surprise me for bonds to take a cooling off period tomorrow. But it doesn't matter what it does. All we have to do is just watch for that to occur. And it kind of seems like that trajectory is just, I think it's just too close not to invert, or at the very least flatten and become actually equal with each other. So that pretty much covers all of that. Now, as far as strategy coming into this, we are going to talk about the plays to make, and I did add a few plays today. However, the key here now, like I'm even just saying, bringing it back into this context of how the markets move now, you could essentially play both sides, puts and calls cheaper. If you have not made trades, this is starting to look like a good time to kind of position yourself on either sides or both. If you've already bought puts and you're down on them, hopefully you still have cash available, because now you're seeing how much they've gotten cheaper on both sides, and you could take advantage of it now. And then again, think about it. It's not like you're buying calls here at the bottom where the market is still pricing in volatility. It's chilled out a little bit. But again, too, it's chilled out in terms of option pricing, but that doesn't mean all of the stuff we have going on has really chilled out. However, this will let you kind of see, one, the markets are not only resilient, but two, the market doesn't really have to listen to what's going on and respond immediately. And that is something I think people need to see here. So the strategy I'm going about this, I'm starting to look for about spreads with anywhere from 36 days all the way up to even December and January. And that's what I'm going to be doing, just because it's going to give me an opportunity to both play with the spreads. If there is any big move up or down, you could cut one side of it. But at the same time, in these moments, just like that rip up has even showed us today, any piece of news could drive the market. And all of today was purely news driven. So that's something you really do have to keep in mind, because any news on any side of the coin can really cause some of these big reactions. But even on the upside, for the market to go up this high that fast is actually insane, I think. So now that we got that out of the way, let's get to the plays, baby. Right off the bat, this is a play. Someone even asked me what play I would make today with this small amount of money. And I figured, I was like, well, I already did it. I bought a $13 option, completely trash option on Facebook. But it was more along the lines of trying to play something shorter term while just if there is any more volatility moves with it. But what happened, there was a report that they hired subcontractors to transcribe audio, even though the people on the messenger said that is okay. They wanted their chats transcribed or whatever it may have been. But this adds a whole nother level of the privacy issue to Facebook. They've already had a bunch of privacy violations. And now the thing that would make this a non-issue, companies like Amazon and Apple have actually gotten in trouble or just called out for doing the same thing. And we didn't see that reaction. However, with Facebook in their past history, especially with contractors, this could be a negative issue. But more on the more extreme front, we have to look back to see what Zuckerberg has already said in front of Congress. Because if he lied about anything like this or it wasn't fully disclosed, I think this could add new issues. And again, you saw what happened with the first fine. But I'd watch this. I got like a 162.50 for next week, but it was way out the money. But to highlight, I thought it was crappy. I didn't want to go crazy on it. It was $13. So that play was one of very few instances where I made a play and it was so far out of the money relative to the time frame. I just went to go with the cheap option that I wanted to spend. I only wanted to spend $10, $13 versus finding an option that's out of the money and that could reasonably get to the money and is still cheap. So if you guys know me and my approach with that, it's not just buy any option because it's cheap. The only reason why I did that in this case was because of the volatility that could arise from it. But watch Facebook. I like that. The McDonald's we got, those went up about double in the morning. They're holding up there. I like how it kind of stayed flat and up 1%. And you could see even after both pops in the market, McDonald's went up, but it didn't go up as much. So people either rotated into other stuff. And I think McDonald's kind of gives you a clearer, I guess, bellwether of what's going on with that. But again, if the market does go down, I wouldn't be surprised to see McDonald's keep coming up. So I'm still holding that into the week. It is Wednesday tomorrow, so that will be important for how the contract gets valued, but we'll keep our eyes out for that. I want to watch Macy's. I believe they report tomorrow morning. And again, we've seen some of the other retailers, and Macy's will give the finger to point to a bunch of other retail companies and how they perform. So I'm going to be watching that. That could be a play we play post earnings. There's now Tilray. We made that spread today. Remember, we grabbed that first time on September, or that contract from September. We grabbed the 75 for $10. It popped up. That contract was like $20 coming into earnings. So what I did instead, remember, I wanted to sell the back end. I turned it into a credit spread, even though it should have been a debit spread, and I sold the 80 contract $5 further out the money than the contract we have. I sold that for $13. So even though I paid 10, I sold that contract for 13. I walked away with $3 profit. Yes, literally $3. But it gave me the chance to play, Tilray if anything happened. And we do have a few other the weed stocks reporting tomorrow. So we'll see what happens with some of those. But watch Tilray, because if there is any other news or if it is kind of a sell-off in a reaction, watch to see what level it kind of supports, or if it really does sell off. I know Tilray at these levels, it's not too far from those bigger lows that it was hitting there earlier. So watch them. Watch Lukin. I think they report tomorrow morning. I made a little gamble on them. We grabbed the Septembers, and now I said, I didn't really want to play it, but I was like, all right, I'll get my hand in there because the IV was really high, and it was really high for the same reason I wanted to play it. These IPO stocks are traditionally, I would say, or inherently mispriced, because you don't know how they're going to move. All you know is the supply, demand, the float, how people are looking at it, and the options are basing it they're basing the prices based off of the moves that it's made in the last, whatever time frame it's been around, but we don't know what it's going to report. We don't know how it reacts, so it's hard to really put a pricing model to it. You mix in earnings, the spreads are going to get widened and all that. That's why they bounce all over the place. I wanted them a few days ago. The same contracts I wanted were at like $50 or something. I got them today for 25. But watch that. But I do think after Lukin reports, this could be a good one to play, and we'll see how it is, especially just the recent trend it's been on. So there's that. Then there's Apple. They had a monster move today. They really rallied up with the SPY, and this is kind of even showing me if there is any direct moves and you are looking to play something on the market, it seems like Apple might really be the one, or it could even be it could precede the market or lag behind it in a weird way. But I like those still. I have those puts. They got crushed. If there is a quick drop, I'm going to see what we could do with calls to hedge it. However, just in general, I'm going to be watching them and using them as a bellwether. So watch that. Watch IWM. I did do a play on them. I grabbed September puts on it. I did a put spread and did 100 of them. It was about 200-300, but really, that was my first scale in. I'm going to wait for another move in the markets, more of a bigger move or something that could give us a cheaper price on these. And if I can get them, I'm going to buy another 100 puts on these. So be on stream when I do have the play more kind of full centered with it. I will show you guys, just like the TLT, if I really believe this could be a monster play and I think it's setting up, I will definitely document it for you and I will make it the play of the month, baby. So put your YOLO demon away, okay? Put him away. Relax and calm down. No. But I want a pony. No. Stop. So watch IWM, even in general, then FedEx. I think this is one, it kind of reminds me of UNH. It's been making big moves, but as you see, we saw the first couple moves that FedEx was making during all of this, and these were big moves, and now it's been kicking it here. And again, you saw the same thing with it at other points of volatility. It can go lower, but if I am going to go anything on the call side, I'm going to start looking at FedEx to kind of be those hedges. So I think that's going to be good. I'm going to be looking at those right in the morning. So someone remind me about those right in the morning. Shout out to Chad, baby. Then there's JD. I believe they have earnings, or I think Y does. They did good. It kind of reminds me of AMD. If you got them in the morning, they were awesome. But besides that, I didn't like the risk reward in the middle of the day. But YY has earnings, and I think, however, YY reports, then if JD, I don't know if I need to see JD's earnings, but I think if some of these Chinese stock earnings can cause sympathies, and it could cause some of these companies to react accordingly. So watch all of those and how they play out. Again, Baidu as well. And then lastly, we've talked about these. Eli Lilly did good. Again, it's related to a lot of this drug stuff and everything coming up. And we already have those plays, and surprisingly, they were up today. They came down. They're barely down, but they're holding their value pretty well, so I like that. I also like Amgen too. That hit the 210. We had those in the money. Then it fell out. I think tomorrow will be a crucial day for it. I think it's either going to have to break out or not, or it could really give up. So we're going to see what we could do with that. And then another one is MyGen. If you guys remember, this was the play we made $40 into like $1,300. But if you remember how I played it, as the stock was going up, I financed the trade, or I used some of the profits to protect me with puts because I was in the money. And thankfully, I have a 35 put and a 31. That was from the past play. So we'll see how that plays out. But that is a big drop. And how that moves, it could move pretty big. The best part is why I'm bringing this up. Tomorrow, we'll see what those are valued at in the morning. And we could use the puts I have as kind of a good place marker to see how to go about playing that. So watch that. And then lastly, over here, we got Roku, Zoom, and Crowd. These are their own value stocks, or these growth stocks that kind of move with the market, against the market. Watch out for them. I like Crowd. The prices are a little expensive, so really what I'm waiting for is when it starts to kind of go opposite with the market, those get cheap. They could be good. But again, if Crowd keeps doing good, and even something like Roku, watch out for Zoom, because Zoom has kind of just been lagging. That's like the B team or the C team as far as these stocks go. But if all those other ones are doing good, you might see Zoom kind of do well with it. And then Roku as well. It's been on a tear. Now those $30, $40 options I thought were unrealistic. Those are up 1,000% now. So watch these as those plays that in the money, out of the money. When they're in the money, fall out of the money. If they lose those value quickly, you could scoop those, and those could be good. But that is your watch list, baby. Make sure you post your watch list below. Make sure you like the video. Make sure you're hydrated, ready to go in the morning. Understand none of this is a recommendation to trade any options. Options trading is extremely risky. You can lose all, if not most of all, your financial investment. The code loves you. I'll see you in the morning. Let's go!